First of all, welcome to a new trading month. By the time of recording this video, it's actually the 1st of August 2024. And for everyone who is watching this video, I wish you the best month ever in your trading career. And whatever the time phase that you are going to watch it, have the best in your trading. All right, so without wasting much of our time, let's jump right into the strategy. So this strategy is basically one of the best entries that one can actually use in their trading. So I am saying if you follow all the stuff that we are going to discuss, there are not many, not difficult, you will definitely get very good entries in your trading. Just follow these stuff and see for yourself. And for proving sake, you may actually backtest to see if it actually works, and you'll definitely be surprised by how much profitable you become using this particular strategy. All right, so what are we going to be using? As you can see, this is the normal chart that I always use, the market maker method chart, right? So on the market maker method chart, there are several indicators that are on the charts, but we are going to be using only the EMAs and basically the traders dynamic index. So we are going to use to require the 50 EMA, the one in blue. Then we are going to require maybe the one in red, which is the 13 EMA, and then the traders dynamic index, which is at the bottom part. If you need this particular template, I can provide you for free. Just use the link to communicate with us directly on Telegram. The link is right in the description box below. All right, so the first thing that you are going to need is basically either the market is going to do two things. It's either going to give you what we call a reset, which probably is going to be difficult for a lot of people, but what we are going to require will be this crossover. If we ever see the 200, the one in white, and the 50, the one in blue crossing over, the next thing is to actually anticipate that where the market is coming from is a reset point, which is not as necessary as we need. So the first thing is to see an impulse, and then after that impulse has been issued, we need to see pullback of the market to the 50 EMA, like what happened here. So when market pulls back to the 50 EMA, it will actually be showing us that we are at a smaller time frame reset. So we had the first impulse pull back to 50, the second impulse pull back to 50, and then after that we'll need to see a confirmed W pattern or M pattern depending on the market context. So in this particular case, we can see there was first leg, second leg, and on the traders dynamic index, this is what we had. We actually had a confirmed divergence whereby we can see the relative strength rising, right? This first leg is actually lower than the second leg, this giving us a sign of relative strength index or relative strength rising. So our entry will always be at the second leg. So at the second leg, that is where we need to start looking for a candlestick reversal pattern. But for those who may actually find it difficult to get candlestick reversal pattern, we may actually wait to see a candle closing above the 13 EMA, like the one like this one. After getting that, the next important thing is exit. Where do you make an exit after making an entry? Exits are made at the 200 EMA. Sometimes the market will actually pass through this particular point, or sometimes they'll just come and reset. So we are saying your entry was going to be at this particular point, and your exit was going to be at the 200 EMA, like that. After getting this particular hit to the 200, the next thing is now to exit that particular trade. So we need to have proof of concept before using this particular strategy or any other strategies that we may get. So we need to have much more examples so that we can use it in our future trades. So I'm going to use the current prices. As you can see, my chart is running right now. It's not something that is stagnant. We can see the market actually moving to the upside. Therefore, I can say someone who has made an entry at this particular point is in profit and are waiting to see their take profit being hit. Then we have this example. Before we continue, please join our free trading community where we share free signals, free trading advice, as well as setups. The link is right down in the description box below. Be part of the winning community. We can see this is now South African Rand against USD against South African Rand. The first thing that we've just said is we've said when this happens on the M15 time frame, 250 EMA cross, we can actually say this is a possible reset. So after that, we now need twice retest of the 50. The first retest was this one. The second retest is actually this one. And then after that, what did we get? We get a confirmed divergence. There is divergence. But one can actually say, where was I going to make an entry? Entries are made with the W or N pattern nomenclature. That is what we actually teach when we are making in our becoming a 7-figure trader or any other courses that we have one-on-one and so forth. You may check our becoming a 7-figure trader. I'll leave the link in the description box below where to actually make an entry. But the viable or the most viable entry was at this particular candlestick, which is a closure above the 13 EMA. And after that, we can see the market actually chopped its way to the 200 EMA like that. So this was actually another good trade, another great trade. We can actually see this is Euro JPY. We also had a crossover. Then we had first, second, third, and then the next the next point. This is where we were going to make our entry and then our exit at the 200 EMA. Pound USD, where were we going to make our entry? Looking back, we can see there was first drop, retest of 50, second drop, retest of 50, third drop, and then we had this big M pattern. First leg, second leg, and it was actually a short trade to the 200 EMA like that. And then whatever the market did was now something else not important to us. So basically, in summary, what we have just said is you need to find proof of reset or proof of trend, which is basically a 213 EMA cross. After that proof of trend, the next thing is to find an M pattern, and that M pattern must be confirmed with the trader's dynamic index. After confirming, we've said candle closure above the 13 is the rightful entry, and then exit will be made at the 200 EMA like that. If the market passes the 200 EMA, we do not care. What we care is actually the 200 EMA to terminate our trade. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.